What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is August 11th of 2019. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to spend some time to try to answer a very important question that many of you have out there, and that is Bitcoin versus gold. Which one is the ultimate store of value? Which one's better than the other? And to be fair, guys, I don't want to spend some time really trying to say which one is better overall. I think they've obviously got very clear pros and cons, and I just want to spend some time to talk about what makes them different, what makes possibly Bitcoin an improvement on gold, but also where does Bitcoin lose out where gold has been winning for thousands of years. So we've got a very interesting topic as well as much more coming up, guys, right after our quick sponsor. Alrighty, so let's go ahead and spend some time to take a quick look over the market. In the last 24 hours, there's really two things to note. Most cryptocurrencies are in the green at the moment, seeing positive returns over the last 24 hours. And also along with that, most cryptocurrencies are outpacing Bitcoin right now, down a little less than 1% at the moment, while we have some altcoins up 3, 5, 10% in this case. Now again, recouping some of the pretty big losses they've had comparative to Bitcoin over the last few days. So if we take a look here, our overall market cap, again, the trend is looking good. It looks like we're exiting out of the correction phase here. Even though we've had a slight pullback here in the last few days, we're still holding around $300 billion, and again have been setting higher lows here, which is good to see. But in the sense of dominance, it looks like we might have possibly topped out at 70%. This was a level we had kind of talked about for a while, and again, it depends on what data you're using. On CoinMarketCap, we just hit 70% the other day. In some indicators, we were up 71, 72%. The problem with it, guys, is it's hard to get really substantial data in this case. In the sense, I would say that CoinMarketCap is the one that people are going to be watching, so I think it holds the most relevancy in that case. But it is difficult to really get the data source on the sense of dominance in order to find when we could possibly get these big even points where we see a retracement. But I'll let you guys know when I see that shift in altcoins in that case, where Bitcoin dominance drops like 2% or something. I think we'll obviously all see it probably if we keep active. But anyways. Let's go ahead here, take a look at the charts here, hop on to taking a look at Bitcoin here. Interestingly enough, again, even though we had a slight dip yesterday and it seems like we didn't get the breakthrough just yet against the line of resistance, setting in a third high here of resistance, third declining level of resistance. The interesting thing is that we've got some moving averages coming in. So we've got, for example, our 3 ones that I've got marked here, which are actually, sorry, I've got four moving averages. I've got the 21-day, I've got the 50-day, I've got the orange line, which is the 100-day, and the red line, which is the 200. So if I remember correctly in my colors, I think the 50-day is the green line here. So we have a chance here where we might be able to get some support on the 50-day, bounce through, press through again. I think that's how the bulls are really coming through. But if we get a breakdown past the 50 and 21 day, expect us to come back down to 9100, test this line of support. That gets broken. Again, we're going down to the next level down here because there's not many moving averages. And I would be actually fine. Again, this is the more bearish scenario, and that would be that we turn down, break through this line of support, and come down to a lower level and make support on the 200 day as it starts to slowly rise up. Dude, I would love an opportunity in Bitcoin at 8,000. Just personally. But that's it for the market right now. There's not too much crazy TA to do, guys. A lot of the altcoin charts don't look good. Some of them are interesting to me. Again, I've told you guys my favorite picks, and I'm more just kind of averaging into those picks if I feel there's a good price opportunity for me personally, in the sense for the longer term cycle. But I'm not doing anything crazy right now. I've kind of built my positions at the moment. Alrighty, so let's go ahead and spend some time to jump into this intellectual and philosophical debate of the cryptocurrency and alternative finance camp, and that is no other than Bitcoin versus gold. Now, I not only felt like talking about a topic like this on a Sunday afternoon because there's not much going on really in the sense of markets or price, but along with that, my good friend Cole Peterson just happened to write an article on Bitcoin versus gold and the comments recently made by Mark Cuban. And I think it's a good precursor to really dive into this because as much as in this article We're going to hear how Mark has a perspective that he believes Bitcoin is actually superior to gold. I actually want to spend some time to kind of read through the article, read through the comments they make, and then make very clear what makes Bitcoin and then also what makes gold superior stores of value to one another. What are the pros and cons? And then also share a very interesting perspective on Bitcoin, to share my kind of philosophy on it as to what Bitcoin might become down the road that a lot of people, I think, still have yet to really consider or understand. So let's go ahead and kind of go through the basics here. So in this article, Cole really puts a good summary here between Mark Cuban and a few other individuals. The first one obviously focuses on Cuban, and he says that gold and Bitcoin share very similar nature, that they're limited in supply. Gold has, an average historical rate over the last 100 years of about 1% inflation. So it's very predictable because it has to be mined out of the ground. And it has the time-tested fact that, it is, on the grand scheme of things, it's very limited. And there's work put into it in order to extract it and refine it. And in this case, he uses the analogy of collectibles. In this case, there is a limited supply to something. Therefore, usually, especially if it has desirable properties, it is going to be something that people desire, right? Because of that, it gives it value. And this is something that has been kind of, used towards the test of time. Now, in the case of, a correlation in price, there have been some critics as well, in the sense of similarity. I think that's the kind of ultimate question here we should start off in a kind of positive nature. Are these assets correlated? And there's an individual named Matty Greenspan, in this case, who works as a senior analyst at eToro, and stated how there's not much of a direct correlation. He said, with everything above, one might expect Bitcoin to come in as a hedge and react to things like trade wars or rate cuts. But the data suggests otherwise. For all three assets measured against Bitcoin, the 90-day correlation factor is less than 0.2, meaning it's virtually non-existent. Now, I think he's right on this in the sense that we are not to the point where Bitcoin is a major store of value for the world stage. It is becoming a store of value for a lot of new people discovering what Bitcoin is. And I think when we talk about, the fundamentals in this case of what's going to make either one of them a more superior store of value, well, we have to think about the pros and cons and what's going to be more relevant in those pros and cons to a growing generation. My generation, Gen Z, millennials, people who are starting to get into investments now, right? Who are going to take on the next phase of wealth generation, okay? So that's the important question. Well, let's talk about the pros and cons of each real quick, getting to the second topic here. So gold, I will say, has some superiorities to Bitcoin. The first I can think of is tangibility. The fact that you can digitize gold if you want. You will have to have a trusted third party if you do that. But in this case, gold is tangible. Gold is much more private than Bitcoin. Until we get, Schnorr signatures, until we get Mimblewimble, until we get people using the Lightning Network and using onion routing, Bitcoin's completely transparent pretty much. I mean, you can maybe get people guessing with sending it to new addresses and stuff, but if there's an origin address, they've got a trail, right? And that's the, I guess, kind of one of the few things I have as a thing that I'd like to see improved on Bitcoin. Now, it can improve, it can change, but that's the current scenario. Gold is, in this case, untraceable. Right, so I'm being devil's advocate. I'm starting off with gold in this case, and this is why, for example, I don't believe gold and silver are going away. I think that they do hold their place, and for example, economies that are still industrializing in this case, I think that gold is still, it's in many cases still the option that a lot of people would choose. But now that we understand those properties, its tangibility, the fact that gold, and also I'd say one third thing as well, is that it's time tested. We know gold has been around for a very long time. Peter Schiff brings this up a lot, and it is true. It is very true. Bitcoin has a very short history. So, we have to take that in mind. Now, speaking about Bitcoin and its pros in this case, Bitcoin's pros come in the fact that it's not just limited like gold. It's absolutely finite. It is a digital payment network. Now, in this case, the reason why Bitcoin being a digital payment network is good is because we live in a digital age. It's very difficult to transact physical bars of gold in any meaningful way of commerce. Bitcoin, sure, its fees can get high sometimes before we get second layer scaling solutions or bigger blocks, but sending money across the world, whether it be $100 or $1 million, it's worth paying a few cents to $1 in fees. It's censorship resistant, and not to mention as well, at the end of the day, it's programmable money. So unlike gold, there is room for it to improve and change over time through layer 2 solutions, and as well as that Bitcoin improvement proposals where the actual underlying node gets an update to its software, right? So there's a lot of interesting things that make me compelled about Bitcoin as well. And this leads me into my third point here. Why is it that I spend more of my time talking about Bitcoin? Why will I have to stand in the same camp as Mark Cuban that I believe that Bitcoin is superior to gold in some ways, and very significant ways at that? The reason why is because not just simply the fact that it's just finite. I think that's one of the biggest reasons. But the biggest reason in my mind is that Bitcoin, as programmable money, has almost endless possibilities. And there's a theory that's gone around for a long time that I think only very few people understand in the crypto space, with how niche we are of an audience, and then really people who are really in the depths of what it can become. I think people have yet to realize that Bitcoin can be used as a settlement layer. And I'm not just talking about a settlement layer for base level financial transactions. Bob sent 1 Bitcoin to Alice. I don't think it stops there. I think that's very dull and boring in that case, just to transmit value on this extremely secure ledger. Bitcoin as programmable money gives us the infrastructure to make Bitcoin as a digital store of value serve as the settlement collateral or store of value for much more interesting financial transactions of different types of assets in a censorship resistant way where we can do things truly peer-to-peer. So what do I mean by this? So as I mentioned, I'm not the first one to think about this, I just want to clarify, I'm not the first one to think about this. There are people like Bill Barheit who has really pushed forward Abra that's doing something very similar to this. But there's a new project that I found through my good friend Yana, who recently she started working for. It's not an ICO or anything like that, guys. But basically, it's called DeBank. And what they're doing is they're trying to make Bitcoin a settlement layer in order to basically be able to expose yourself to any asset you want in the world, with Bitcoin being the settling asset underlying. So what do I mean by this? Let's say, for example, I had a Bitcoin. Bitcoins have a certain amount of value at a given time, depending on a variety of exchange rates. And another friend of mine might have some Bitcoin as well. Maybe they could be my good long-lost cousin who's all the way in Venezuela. And in Venezuela right now, they're having a currency crisis. So, in the United States, I'm in a very different scenario. I might, for example, think Bitcoin's still too volatile. In this case, I might just want exposure to the dollar. Maybe at that time, I'm like, I believe Bitcoin is going to go down in this case. Because, obviously in that case, I probably wouldn't own Bitcoin. But let's say I want exposure to the US dollar, okay? And my neighboring cousin in Venezuela doesn't like the Venezuelan bolivar, and he wants exposure to Bitcoin. So we can enter into a contract in this case. And maybe we might not even know each other. There might be a market that matches us, that we're just in opposite camps. Very similar to a trade. It would basically be that he gets in the contract long on Bitcoin. Bitcoin goes up over time. He's going to get more Bitcoin out of our shared Bitcoin. And then in this case, if Bitcoin goes down in my USD position, I'll actually get more Bitcoin in this case. So it's a contract. It's basically a CFD in this case between the two parties, right? So this is a very interesting concept. A contract for difference is the technical term that allows us to basically settle all kinds of different transactions. Now, in this white paper here that they talk about a lot of interesting use cases of what you could do with these CFDs, and it's this whole kind of settlement layer for Bitcoin. And I won't dive through all of it, but I do believe you guys should read through it. It's not a bad read. And it speaks to what is possible with Bitcoin's network that really isn't possible with gold. It's what I try to share with a lot of the gold bugs out there. It's kind of, you have to think about it. We live in a digital age and stuff where everything is settled digitally. Most of money in the world is digital. Our generation is a digital generation. I would hope that those, from kind of previous generations who have been supportive of gold see that this is the optimal solution for people like myself. And I know there are a lot of you out there and stuff who have been gold bugs before, who are big on Bitcoin. Some people who might, be coming from older generations who get this and see how positive this might be for the world stage, to allow myself or anyone to be able to do transactions with any of you out there in any way, shape, or form. And the cool thing is, unlike a brokerage platform that might offer these services and get the permission to allow us to trade like this, and maybe might decide one day that it needs to shut off those opportunities because it's maybe too risky, or the fact is that maybe the government doesn't want it, doesn't matter. It's on Bitcoin and we can do it. That's the powerful thing about it. So anyways, very interesting theory. Again, this is a little comparison chart they had of DBank, but you can kind of see, again, I recommend you read this white paper, guys. I think this is the most relevant towards this topic. Anyways, all right, so let's go ahead and talk about traditional markets. I talked enough about that for today. Want to go ahead and talk about what's going on in traditional markets, and pretty much nothing but outflows. So we had a huge exit this past week in stocks, really big correction across the board, and traders are exiting bank ETFs at the fastest pace this year. We had about $1.5 billion exit out of all U.S. listed exchange traded funds tracking the financial sector in the week of August 8th. 1.5 billion. And that's just ETFs in the financial sector. So this is, for example, the KBW Bank Index, which is tracking basically the current valuations of a variety of banks. It's 24 international banks, or sorry, not international, U.S. banks in this case. So again, very leading indicator here for how the financial sector is doing. And it's not the only sector and the only index that are down. We can see here, guys, just back here, August 6th, another Bloomberg article, $1.4 billion exodus from emerging market ETFs. We're seeing a squeeze on, again, money exiting out of asset markets, especially tied to both the financial sector and those ETFs and investments that are exposed in emerging or developing economies, right? So $1.4 billion out of the iShares MSCI Emerging Markets ETF. This is one of the biggest ETFs in the world. Huge, huge ETF for exposure into a broad emerging market. And that shows us that there's a slowing economy in this case. We're seeing the weakening signs. And I think these are all genuine concerns here to take into account. And I want to lead into the kind of final topic here because we don't have too much to talk about here in the sense of traditional markets. I just want you all to take a look at the NASDAQ, the Dow Jones, S&P 500. Doesn't matter which one you look at. You'll see a roughly similar trend to this. The highs are slowing down and the lows are setting the pressure. We're getting an ascending wedge. Now, an ascending wedge might sound positive, guys. For those of you who know TA 101, it's not. I'm not going to say that we can't have a breakout on this, guys, to be fair. For example, I've talked about in my newsletter the possibility for NASDAQ 10,000. The reason I believe that could be a possibility is that the Fed decides to come out in this next meeting and say that they're going to, cut rates significantly and that they're going to cut it 2 or 3 times over the next year or so. Then that's going to set us on the clear course that, we're going back to 0% interest rates, right? The Fed's going to keep the expansion going. It could very well be that they decide not to and that things turn over very quickly. Now, I will say, I'm assuming we're going to have an FOMC meeting here towards the end of August. Not 100% sure just yet. But whether it's here in August, whether it's here at the end of September, or the end of October, in this case, stepping into November, one of these next meetings is going to set a precursor for where we go in the sense of the stock market. And not just in U.S. markets, but for global markets. Because if the U.S. market fails, all else fails. It is the leading asset market right now. As much as the stocks in the U.S. have been shaky, they've still set new highs throughout 2018 and 2019, where others have plundered. And, if we get a rally to NASDAQ 10,000, or breakout here, and we get more interest rate cuts, yeah, we might make some equity trades, but I'm honestly not going to expose myself too much. I'm more than anything, I'm just worried that this is going to break down and we can get something like 1987. We're going to get like a Black Monday. Because at that point, I think it's going to become very clear once we break this technical pattern on the longest economic expansion in history, 1.8 billion or 1.5 billion in ETF exits are not going to be a thing. They're going to be minimal. You're going to see tens of billions of dollars, hundreds of billions of dollars, and trillions of dollars of valuation. Poof, just like that in an instant. That's my thesis. Love to know what you guys think down in the comments down below. I hope you guys are having a great Sunday. Apologize a little bit. If there's a few cuts and stuff. My nose just got stuffed up, guys. I don't know what it is. It's Sundays. Stuffy nose Sundays. Anyways, I hope you guys are having a great day wherever you are. I hope you all take it easy. Don't worry about the charts too much, the market. Go have some fun with your family and friends. Take it easy. You guys deserve it. But until the next video, thank you all so much for watching. I'll see you all in the next one. Stay tuned.